Hi everyone, welcome to our 2 Cents. I'm the CEO of GCES, Clinton Smith. I'm here with GCES's founder, president, and also our resident financial advisor. Galen, how are you?
Okay, Clinton, how are you today?
I'm doing good. You know, it's summertime. It's a little bit warm out. I'm a little wet, a little moist, but we're going to get through it today, guys. And we're going to be talking about something that's really important, and it's the ups and downs of annuities. Now, annuities, that term has had some negative connotations towards it for the last couple of years, and we're going to get into that today and tell you why. But for the people at home, Galen, that don't know, what is an annuity in a broad general term?
Broad general idea is when you're taking a lump sum of money, whether it be an IRA, and you're moving that into a life insurance company to hold it, to put insurance around it, and they're going to guarantee you an annuity, which means monthly income.
So annuity is a way that you take all of the money you've saved over your life or money that you get from an inheritance, and you put it into a vehicle that is going to generate for you lifetime income?
If you want it. You know, annuities, you know, they give you the option to have an income stream, but you don't have to take an income stream if you don't want to. An annuity could just be simply you placing your lump sum of money with an insurance company to insure some things, whether it's ensuring safety of principal so you don't lose, you know, some kind of feature to give you something, you know, some kind of protection.
So why wouldn't a person just want to take $100 or $1,000? Let's say someone has, you know, $300,000 saved for retirement. Why wouldn't they just want to take out $1,000 a month and call it a day?
You know, a lot of people do. That might be their goal. You know, a lot of times I run into people that want to save money and pass that on to heirs. You know, to each his own, every situation. But you don't have to have an annuity rider where you're guaranteed an income stream inside of an annuity if you just want $1,000 a month. There's ways around that.
Yeah. So guys, in general, annuity is a very general term, and there are a ton of different types under it. It would be like calling a gecko a reptile. Do you know what I mean? There's a ton of different reptiles out there living.
Yeah.
I don't know, that's a really random way to like sum it up, but there are a ton of different reptiles. But you know, there's a crocodile, there is a gator, an alligator, there's a chameleon. There's all these different type of reptiles. So can you break it down? There are three main categories that we're going to talk about. And what are those three main categories of annuities?
Yeah, I would say in general there's three. You have your fixed, where you're going to be guaranteed a fixed rate for, you know, 5 years, 7 years, 10 years, you know, and then that rate's not guaranteed after that. That's fixed, where you're going to get a guaranteed interest, kind of like a CD, but these are called MYGAs. You have your fixed indexed annuity. Fixed index mean it's going to be fixed where you can't lose any money, but you're going to play indexes, you know, and how they perform is going to be growth. There's nothing guaranteed set in stone. And then you have your variable annuities. And in a variable annuity vessel, that's going to vary the market. You aren't going to get safety of principal like a fixed or a fixed index. You could go down in value inside of a variable account.
So with all these different types, you know, the best way, honestly, guys, for you to understand what the best type of annuity for you is to give a call to the number on the screen. We can walk you through this. We can go over all of your finances in retirement. Just give a call to the number on the screen. We can help you understand the ins and outs of annuities. But for today, let's talk, you know, there's fixed index, there's variable. I know where it comes from, but where does the negative connotation come from in all of these? Why do people have a negative feeling towards annuities?
I mean, people talk, you know, I think in general, you know, a variable annuities kind of got a worse rap than a fixed indexed annuity or a fixed annuity because there can be losses that occur and the fees can get quite steep inside of a variable annuity depending on how many riders and features you're putting in to either play the market or to guarantee an income stream in the future. So it's all about the money going out the door when it comes to the variable, and you know, people don't want to spend that much money, but at the end of the day, there's always a proper place, and a variable annuity fits for some cases.
So before we get, I know we're going to get into that a little bit deeper in a little bit, folks, but I do want to talk about factors that you should consider before getting an annuity, things that people should think about before they actually sit down and sign the paperwork.
Yeah.
You know, obviously, I know the first one is age, but why? Why is age a factor in purchasing an annuity?
Well, when it comes to, my approach when I, talk about annuities or put people in annuities, at the end of the day, I'm looking at a financial view of it and using an annuity as a protection where you're insuring a portion of your money. So age comes into very big, because if you're younger and you have a very high risk tolerance, say you're 30 years old and you're not going to retire until 60. You don't want to be in something fixed when you could be in something that is going to create a little bit more wealth. So age is definitely a big factor in what product you should be in.
So what age do you really think it is where an annuity is the right thing for you?
Well,
is there a specific age?
Yeah, some people just in general don't want to play the market. So automatically, if they're very apprehensive about it, age doesn't really matter. But I would say retirement age. That's when you're really trying to protect everything that you grew, because you don't have that time horizon that if the market dips back down, it's going to come back. It's never not come back, but it gives you more stability, more peace of mind.
So also, people want to consider, what kind of goals do you actually want? What are the goals that you have with this money?
Yeah, what do you want to accomplish out of your annuity? Do you want a guaranteed income stream for the rest of your life that you cannot live? And if that's something that you want, then you need to make sure you're in an indexed annuity where you're probably going to hit that rider where you are guaranteeing that income stream. So a fee associated with it, not all companies have fees, but is justified because that money is going to be in the bank every day for the rest of your life, no matter what. That's important.
So you really just walked into my second point.
Yeah.
When are fees involved? How is that? How do people know at home? When is it okay to have a fee? And what kind of fees are really involved in purchasing an annuity?
Fees are like anything in life. It comes to quality. So you can have something, bare bottom without a fee, and that might not, be exactly what you need, but at least you're not paying that fee. If you're willing to give up a little bit of the money to back to the company, then you can build in a lot of guarantees where the fee is justifiable because you're going to have an extra benefit, whether that be a care rider or an income stream in the future.
So now we're talking about riders. What are some riders? Is that just the guaranteed income rider, or is there other riders as well?
No, you can add in riders for care. If you can't perform 2 of the 6 daily functions for long-term care, it might trigger. And then you could have a little bit of a care benefit if you need help with assistance in living.
Awesome. Guys, we're going to be right back in just a few seconds, and we're going to continue going over the ups and downs of annuities. We'll see you in a minute. When we started the business, we didn't know what it was going to come into. We answered a Craigslist ad, and Galen had already had experience in the insurance industry, and we just started working with federal employees.
Inside of our office, we have about 5 support staff that, answer phone calls, questions, paperwork, things like that.
I think clients enjoy working with us because we make it a very easy approach for them, where they might not understand why we're asking some of the questions we ask, but in the end, we put it all together in a 56-page customized report for them that we do for free, where it's a free financial analysis for them to understand everything that they have.
I think clients appreciate the most that we're more down to earth than some other firms, but we have fun while we do it.
Welcome back, everyone. I'm here today with Galen Bargerstock. We are talking about the ups and downs, the ins and outs of annuities.
Yeah.
And I'm sure you talk about this every day of your life.
All day, every day long, yeah.
Do you ever dream about annuities?
I do, yeah, at times, yeah.
You have really boring dreams then.
Right, yeah,
yeah. So guys, we're trying our best to not make this boring. We know for everyone that's at home, most people do not enjoy talking about this. So if you've been watching from the beginning, I applaud you. Yeah. Thank you so much for watching our show. We try to keep things fun. We want to keep things realistic and what we can actually talk about and get over to you guys and make you understand. But honestly, the best way for you to go over your finances, your retirement, make a plan, is to give us a call. You just call the number on the screen. Galen or one of our advisors will sit down and go over all of this stuff with you and answer all of your questions. But I know one of the things that I want to talk about, let's talk about bonuses and stuff that you can receive when you purchase an annuity, because I know this is a big thing. Some companies offer bonuses, some of them do not. Yeah. What is a bonus that you could get when you're making a purchase of an annuity?
Yeah, so a bonus is, say it could be an income bonus, because everything with income streams is all based on how much money you have when you trigger that policy for that income stream. So the more money you have, the higher the payout rate percentages because of the mortality timetable. Yeah. So that takes into consideration in the factor, more than anything else.
Yeah. So guys, these are factors that we want you to consider before getting an annuity. There are bonuses. Does yours have a bonus? Do you want the bonus? Or are there other companies that have better products that are available for you? But also, we're talking about safety of principal. Yeah. This is something, if you want safety of principal, an annuity, a fixed or a fixed indexed annuity could be the right choice for you. Can you explain that?
Yeah, I mean, at the end of the day, like you said with the bonuses, the companies will have different things that they will do to have you use them as a company. To me, insurance is all about the insurance. The company, we're going to represent all of the companies and tell you which one's appropriate for you. But when it comes to this kind of stuff, you really need to, get the ones that don't have as much fees that is going to be appropriate for you.
So I know, right, we've talked about fixed index annuities. Mm-hmm. There's also variable annuities. And, variable annuities, higher return, higher rate of risk. And that goes across anything. Anything that has a higher return is also going to be more risky. Am I right?
Correct, 100%. So a variable annuity is not guaranteeing you safety of principal. Most of the time you're going to use a variable annuity. They might buffer it where you might have, a less of a loss if the market goes down, but people usually choose them for an income stream in the future, because you're still going to play the market at a high risk level because you can take losses when the market falls. But at the end of the day, there's some sort of protection inside of a variable annuity that's, if the market goes under, that you have something to fall back on.
Now let's talk about liquidity.
Yeah.
I know you're putting all of your retirement savings into one thing. People want to be able to still get money out if they can. Is there a way to have it more liquid? Is there a choice that makes more sense if people want to have their money more easily accessible?
Yeah, I mean, that's one of the things that I talk about as, a negative on an annuity. It's liquidity. You might not be able to pull as much money as you need, so you have to make sure that that's appropriate. Most companies, and there's different for every kind of situation, but most companies will let you access 10% a year. So if you're okay with only pulling 10% out a year and you have money on the side for, a roof that might leak or a new furnace, then an annuity is appropriate. Every case, again, case by case.
So again, guys, case by case. That's what we keep saying. If you want to sit down with us, all you have to do is call us 888-391-3465. And we can make all of this so much easier on you. We can come out to your house. We can sit down with you on a Zoom meeting, or you can come into our office. It's located in Indiana, Pennsylvania. We'll sit down with you, go over all of the things that you get in your retirement, explain the ins and outs of annuities, and it's that easy. You can make the call today. Right?
Oh, for sure.
So I know we've met with a lot of people that have been locked into an annuity that are at home right now. Some of them might be watching this show, but let's say that you're locked into an annuity. What do you do? Like, let's say that you want out of it. What are the things to consider if you've already signed up for an annuity and now you're watching this show, wondering if you made the right choice?
Yeah, I mean, I think nowadays everybody is questioning that, that are in certain types of annuities because of the way the market's been. The market's been so unstable for the last couple of years, and inflation, went up so high, bond prices went down, they might not be performing as well. I don't blame the annuity carriers, XYZ, whatever they are. I do not blame them at all. I blame the environment of the world we live in. And if it's underperforming, you have the ability to, probably examine it and see if you can move somewhere else and have that make sense where you're not going to lose money to move over somewhere else, and maybe you're going to have better and different index choices and cut your fees. So, it's one of those things where, like you said, a long time ago about car insurance, examine it, same basic principle. try to get what you can get and keep on looking into stuff.
Yeah. No, guys, I know annuities can be a difficult subject. You know that you've talked to tons of people about annuities. Whenever you meet with someone, what are the chances that they even understand the annuity that they already have?
It's pretty likely that people aren't going to understand the annuity that they're already in. You know, it's unfortunate, but a lot of times, you know, when, you know, financial advisor like myself, we talk to people, we don't mean to, but we're maybe using terms that you don't understand and you're just nodding your head thinking that we understand everything you're saying. So, you know, it always, if I'm examining somebody else's with what they went into with somebody else, I can hear it in their voice that they don't really understand what's going on. And if I'm putting somebody into an annuity, I want them to know what's going on. And if they don't, I would appreciate it if they would tell me, because I'm all about the educational aspect of it, where, you know, just to inform you what you have.
Yeah. Guys, when we started this company, we wanted to be able to sleep at night. So we do the best thing that we possibly can for all of our clients. And whenever we sell an annuity, a lot of people will sell an annuity and then they disappear. You never see them again. You know, you want to stay the fly-by-night agent is what we'll call it. You want to try to stay away from that. You know, don't make a purchase without thinking about it first. I know that you're no pressure whenever you meet with people, because no one wants to be pushed around. And a lot of people need some time to really understand this, because I know that in an hour and a half, 2-hour meeting, at the end, their mind is everywhere.
Everywhere, you know, and I throw so much at a person when we meet for 45 minutes to an hour, because I'm pretty much summing up everything you have and telling you how to make it better. So I can see how that's overwhelming. The biggest thing that I can tell everybody out there, the biggest tip, make sure that the person that you're buying an annuity from is not a life insurance agent. Make sure that that person is a fiduciary, a financial advisor that has other options of what to put you in, because we have the obligation to tell you the truth of what's going on. So a life insurance agent, you know, I'm not saying that they're malicious or anything like that. I'm just saying that they are selling a product. They're selling life insurance. Yeah. They can't do the alternative, so they might steer you in one direction other than the other.
Yeah. Guys, it's kind of like going to a shoe store whenever you could go to Walmart and get groceries at the same time, right? Like, is that a good way to sum it up? I don't know if that's a weird way to make it seem normal, but
we're a superstore. Yeah, I get it. Yeah,
we're a superstore. Yeah. So guys, we can answer all your questions. You really just need to give a call to the number on the screen, 888-391-3465. And we can go over all of this information, help you understand the ins and outs of annuities, and make sure that you're making the right decision. And then we're going to be there for as long as we're alive. You know, It's not just, you know, here's your policy, we'll see you. Never again. You know, we want to make sure that we're there for our clients. And guys, we're going to get into top 3 ways you can tell an annuity is right for you in just a moment. We'll be right back after this.
I think the best thing to start out with retirement is just knowing that you don't have to have a certain dollar amount for retirement. It's just knowing that you want to retire and you need to start thinking about the different aspects of it.
You know, even if you're in your 30s and you just got married, it's time to start meeting with someone and get a plan in place. It's not always easy to do it whenever you're right there at retirement. So if you're years out, it's time to get a plan in place.
I think a successful retirement is a happy retirement. It doesn't matter to me how much money you're going to make into retirement. You know your bills better than I do. So I think just being happy and comfortable with what you have is the appropriate amount that you need for retirement. It's very important to have a financial plan into retirement, because if you don't have a plan, you're going to kind of be lost with what to do. And plans change, but at least if you establish a plan, you have a little bit more consistency of what's going to go on.
Guys, welcome back. I know that was such a short break. It was almost so short that you probably could have called our office and made an appointment. It's that easy, right?
Yes, it is.
So guys, welcome back. We're talking today about ups and downs of annuities.
Yep.
And Galen, I'm sure you've seen a lot of ups with annuities, because it's a really popular product and people want to have a safety of principle where they're not worried about losing their money.
Yeah. Fixed indexed annuities are probably by far the most popular, the most that, you know, I talk about, because, you know, when it comes to retirement, which that's what I'm guiding you to, you don't want to lose money. You want to know that your money is going to be there. And if you're spending the money, which you should, you want to know the consequences of it. Are you going to get growth?
So someone's sitting at home right now wondering, is an annuity right for me? What's the number one way that you think that they can tell that an annuity is right for them?
Do you need more income in retirement? If you have a pension coming in and you have Social Security coming in, but you're still not making your monthly bills and you need a guaranteed income stream, annuity is perfect vessel for that, because now you've just solved the third piece of the puzzle and you can guarantee that you have enough money, for the rest of your life.
So guys, it's called a guaranteed income stream, and that's something that's offered on just some annuities or all of them?
Most annuities are going to offer a guaranteed income stream of some sort. Some do not. I don't want to say every product has a little bit different, and that's why we have to have that
like alligators and crocodiles.
Alligators and crocodiles. Yeah. It's true. It is. Yeah.
What is the difference between an alligator and a crocodile? Do you know that?
Something about it after a while, or I'll see you later. I have no idea.
Yeah. I don't know either, but if guys, we are not the people to call if you have questions about crocodiles versus alligators, but we can answer your questions about annuities.
Maybe a joke too. We might not be them.
Yeah, we're obviously not comedians. So you want a multi-year guarantee of returns.
Yeah.
What does that mean? How does that break down into the world of annuities?
So theoretically, just a number. Let's say that you have $100,000 and you want 5% out of that, and you can find a annuity that's going to give you a fixed rate of 5% for 10 years. Well, if you wait a year and pull 5% and it's building 5%, theoretically 10 years later, you're still going to have $100,000. I kind of call it live on, leave on, because you're living off of that money and you're still leaving that on to loved ones at, a guaranteed rate that you understand, because it is a fixed rate, which is going to build in a guarantee.
So let's say someone has a fixed rate of 5%.
Okay.
And they're only taking out 2% a year out of there. What does that mean? Like, how's that going to work out? Is that where they are able to have that money forever? Their balance will never go down?
Well, if they're pulling out 2% and it's making 5%, theoretically it's gaining 3% interest every single year, because it still has growth on top of it. So, you shouldn't outlive that money, but, you also could do it like that, but there's still a liquidity thing. So if you need 10% out one year, well, you're pulling 10 grand, which is a little bit more than the 5%, but you still know you're getting that 5% guarantee.
Yeah. So guys, there are a lot of things about annuities. You can always give us a call, and Galen will come out and sit down with you. You can come into our office. We can do it over Zoom. Annuities are huge, and there are a lot of different types, and there are a lot of different things that can go into them. So if you are talking to someone, even if it's not us, guys, do yourself a favor and ask them, what other annuities do you have available for me to take and choose from, and make sure that that person that you're sitting down with is not just giving you one option, because honestly, that might be the only thing that they sell, and they could care less if it's right for you if that's the only product they have to sell.
Yeah, 100%. If they're just pushing one specific product to you over and over again, and they're not giving you other options, that's a red flag to me. I'd question it myself.
Yeah. So let's say someone has decided, I don't want an annuity for whatever reason, whether, they don't want the money locked up for a period of time, or they just don't, for some reason, want to get past that the word annuity is an okay thing.
Yeah.
What else is there? Like, is it annuities, or, that's your only choice? What else is available to people that don't want an annuity?
No, take into consideration your retirement, your 401k. You could roll that over into a securities account, assets under management, where, I would be the money manager on that. We would talk about, your risk tolerance. I would ask you questions of where you want to be in the market. I can never guarantee that you're not going to lose any money. I just can't do that. That's what an insurance company is going to do. They're going to insure your money for you. But the liquidity thing is the biggest thing with that, Clint, because in an account that I were to manage, 100% liquid. So if you have $100,000 and for some reason you wanted $100,000 out tomorrow, we could start that transaction and you can take it out without penalty.
Okay, and by liquidity, let's explain. I know that I want us to break it down in easy terms. Yeah. Some people might be like, oh, liquidity, does he mean like water or Diet Coke?
Access.
Okay.
Access would be the word. How much do you have access to of your money? Because in an annuity, annuity vessel, just for an example, you could have a free annuity, and it could just sit there. I think of them as holding companies, how they make money. They don't want you to pull more than 10% out a year. And if you do, you're going to have a penalty on what's above the 10%, but you might not have any fees at all. Whereas if I'm to manage the money, you have 100% access to that money at all times. We can change it, manipulate it any day you want, but there's fees involved. So there's going to be a fee involved with that, where an annuity might actually get rid of the fees as well. So again, case by case basis. It's so different and difficult to talk about, not just boring.
Yeah, yeah. I mean, it's really, guys, it's so hard for us to break these things down because we don't know what you guys have at home. Yeah. And that's really the thing that we have always been absolutely on top of, is making sure that we treat everyone as an individual or as a family. Whenever we come in to meet with families and to go over your finances and your retirement, we want to make sure we're taking a look at the whole picture and that we're able to offer you more things that you might not have even heard of on the outside market. Yeah. Or from anybody else. Like I said, we want to be able to sleep at night, and that really means that we have to go down and really make sure we're doing the right things for people.
Yep. I mean, I've said it, other people have said it. You insure your car, you insure your house. Why would you not insure your entire retirement savings? It's just, you have to have some sort of assurance.
So and now we said that the other one is out there is securities.
Yeah, securities.
So this would be like all the different types of birds. Right? Annuities will relate to alligators and different types of reptiles, but there's securities, and it's like there's all these different ones, right?
Exactly, yeah. So if you're going into a securities account, you could go into different types of investments, whether you're with a broker-dealer or, AUM. At the end of the day, it's like, do you want Apple? Do you want Exxon? Do you want Walmart? You have the ability to choose where you're going with everything in the securities. It's so much more fluid, so much more liquid on what you can do. It's just not protected. It's not that guarantee.
So guys, when we break it down for you, the thing is here that you really need to look at is that all of this is overwhelming. A lot of it, there's a lot to take into consideration. And that's why we don't believe in anyone doing a DIY retirement. You can DIY your kitchen, because you can screw that up and fix it later, but you can't DIY your retirement, because there are places that you can make mistakes. If you're sitting at home and you want to talk to us, Galen, I'm telling you, or you tell them, you're willing to meet with anyone.
I am willing to meet with anybody. I like everything. I think that every single person has a voice, and they should be taken care of exactly the same way, no matter what stage of life you're in.
So guys, it's that easy. Give us a call today. The number is on the screen. You can find us online. We'll come out, we'll sit down with you. You can come into our office. We can help make this whole process of understanding, is an annuity right for me or is it not? If not, what should I do? We make it that easy. Give us a call today, and we'll see you soon, guys. Have a great day.